Hello there and welcome to ADIPEC Energy Dialogues, a series of conversations with leading analysts from around the world looking at the oil and gas sector and looking at how the energy market matters to you, exactly what's going on. We're probing and asking them the key questions as to what's happening and how it's impacting the market right now. I'm Ethna Trainer, your moderator for this session, and I'm absolutely delighted to be able to welcome for this particular ADIPEC Energy Dialogues, the Managing Director and the Global Head of Commodity Strategy and MENA Research for RBC Capital Markets, Helima Croft. Thank you so much.
Thank you so much for having me on.
It's been a while. I've wanted to have you on, so it's great, and it's a really vital time. Here we are at almost the half point of the year, just past the half point of the year, and also looking at a very, very important meeting by the monitoring committee, the ministerial monitoring committee with OPEC. So they've done what they said they would do. I suppose the market was expecting it, but so they're easing off on the production cuts that have been in place for a while now. Was this the right thing to do? And indeed, was this the right time to do it?
Well, and as you just said, I mean, the market understood that easing was going to occur. When they did the largest cut in history in April, they basically came up with a schedule of tapering down the cuts, and this cut is actually going to last over 2 years. So this was not a surprise to the market. What is going to be interesting to watch, though, is can the market absorb these barrels? And the demand numbers are absolutely improving. So I think that's why the OPEC leadership believes now is the right time to do this. They're looking at the pickup in demand in Asia as people get back on the road, they get on planes again, looking at the recovery in Europe. And they're basically saying, now is the time to carry through what we said we were going to do. But there are question marks. There are question marks over the trajectory of the virus. Can this recovery hold?
And indeed, that's going to be the big question, I think, for the rest of the year too, and the danger, in fact, if we see round two, so to speak. But something interesting when I look at the media coverage on this, some people actually talking about this will be an increase in production for 2 million. And, while yes, I suppose if more barrels are coming back on the market, it is a bit of an increase, but the language is interesting around that. And it's not necessarily a whole 2 million. I think we've also got a few that have promised some serious compliance and to make up for what perhaps they didn't do. That's also very interesting. What do you think?
I think it's very important that you had strong statements from His Royal Highness, Prince Abdul Aziz, the Russian oil minister, Alexander Novak, indicating that in terms of their two countries, the increase in production is not going to go to exports, it's going to go for domestic consumption. So that's very important. Prince Abdul Aziz talked about the uptick in demand in Saudi Arabia for utilities, as more people actually stay home in the kingdom and drive. So that 500,000 barrels is not going to go on to exports. It's going to stay in Saudi Arabia. And as you also mentioned, you have a number of countries that have been a little challenged when it comes to compliance, and they have promised to make additional cuts. They're supposed to give that timetable and schedule for cuts at the end of the month. And so a cut that looks like on paper, an addition on paper that looks like it might be 2 million barrels, actually could be significantly less depending on the compensation that's provided from countries like Iraq, Nigeria, Kazakhstan, Angola.
Now, of course, the Saudi oil minister and indeed the collective group has really been putting pressure on those countries as well, particularly Nigeria, Iraq, Angola, Kazakhstan, to actually comply. And at the Ministerial Monitoring Committee meeting, we heard from some of these ministers, very publicly saying they're going to do it. And they're really committing to making sure that they make up for that and that their compliance already is getting better. This is, it's something kind of new in many ways, but that absolute commitment, that very public commitment coming from the ministers, this is also, I think, really, it looks good for OPEC Plus, really.
I mean, I think of this as the Prince Abdul Aziz doctrine, and we first saw it in Abu Dhabi in September at the World Energy Congress, and then in his first meeting at the JMMC in Abu Dhabi, where he essentially said Saudi Arabia is prepared to do more, but everybody's going to pull their weight. And his singular focus has been on compliance. So at that first Joint Ministerial Monitoring Committee meeting that he chaired in September, he made the Nigerian oil minister, he made the Iraqi oil minister talk about their overproduction and the plan to become compliant. This is a feature of his chairmanship, his co-chairmanship. It's a feature of his meetings. And this is something I think he feels very proud of particularly when you look at the numbers from Iraq. Nobody thought Iraq was going to be able to get their production as close to quota compliant as they are now. And Iraq has made tremendous strides in the last couple of months, bringing their production down. So I think he feels very good about that. And now the focus will be on some of these other countries to ensure that they can follow Iraq's path.
And of course, Iraq has a new minister on board, but again, making that commitment to making sure that he's very much in a collaborative and coordinated, way of working with the other ministers. But again, we look at, what's going on in Iraq. It's still in a rebuilding phase in the country. They need every cent they can get, really. So how challenging is that going to be for them?
I mean, this is an enormous challenge for them, Edna, because again, it has huge security problems. We had mass demonstrations in the country in the autumn over lack of economic opportunities, lack of clean water, lack of jobs. And so the Iraqi government needs every barrel and every dollar earned from that barrel just to pay public servants. And so this is where extra financial support has been essential. And I think the strong financial support that Saudi Arabia has given to Iraq and promised to Iraq, I think it's very important in helping Iraq do what they need to do in terms of OPEC. I think it's actually been part of a whole assistance package that has been important to getting Iraqi compliance in a good place. They do need extra outside financial support, given the challenges they're facing.
When we look at, geopolitics around the region, and of course you're looking now very closely at MENA research on top of that, so you probably know more about what's going on than a lot of people, and you can collectively bring it all together. But let's take a look at Libya, because we hear one day things are getting better, and it gets better, it gets worse. We're not real sure where it's going, but I think it's something we'll all need to be keeping a look at, as we go through the next few months, really.
I mean, Edna, I think Libya is really the wild card producer for the back half of this year. I mean, Libyan production since 2011, since the fall of Gaddafi, has really fluctuated wildly from sometimes, 1.3 million barrels a day to 300,000 barrels a day, based on the security situation in that country. And we've had over 1 million barrels of Libyan output off this market since January. And all of a sudden, the news flow changes, and we think that production is coming back. They actually loaded a tanker from the eastern terminals, a week ago. And now it looks again like we're not going to be getting additional barrels out of that country. So we just have to wait and see what happens there. But it is a tremendously volatile situation, and its production can fluctuate quite dramatically. So if you're an OPEC planner, having to factor in Libya is an enormous challenge. I mean, I always say they think of themselves as central bankers, but they also have to be diplomats and security strategists.
So true. There's a lot that they have to actually play for and play with at the moment to make sure that they get it right. But one thing, of course, they are looking towards, and even with the oil market report from OPEC and indeed other reports, I think without a doubt, we're seeing some demand coming back into the market. And when you look at, it's everybody's crystal ball that's very cloudy, I suppose, at the moment, post-COVID, so to speak. Do you think that what will the demand supply balance look like then, if you can maybe hazard a guess in either way in terms of how we're looking when it comes to demand right now?
I mean, Edna, what we're really seeing is demand coming back in places where they flattened the curve. And so we really are, for example, seeing a pretty strong demand recovery in Europe. We've seen a pretty strong demand recovery in Asia. I mean, Asia is where we're back to almost pre-crisis levels. Where there's real concern is what is happening in the Americas, in places where they haven't flattened the curve, in the United States, in Brazil, in Mexico. And so the question is, does this remain a phenomenon contained to the Americas, or in the autumn, do we start to see caseloads grow globally? And why we also really focus on the United States is 10% of global oil demand is made up of US gasoline demand. So if you have a situation where a driver in Texas decides to keep his car in the garage because of new shelter-in-place restrictions, that could have a material impact on demand. And so again, we see these green shoots in key places where they've flattened the curve, but we remain incredibly concerned about the caseloads that are rising in the United States and the rest of the Americas, ex-Canada.
Yes, indeed. But also looking at, and particularly in all of these areas too, the amount of people working from home. So as you were saying, if that car is sitting in the garage, and if we have, a round two, the consequences are, pretty scary really for the near term.
Right, that's the interesting question. Are we going to see permanent changes in behavior? And some people would say on the plus side, well, there has been some move to driving more, because with transportation, public transportation shunning, people are getting in their automobiles more. And so again, we just don't know how this is going to play out in terms of changing behavior of consumers, of drivers, but there's just a lot of uncertainty. So when His Royal Highness Prince Abdulaziz yesterday basically said, we are going to be watching very closely and we can react very quickly, hold a meeting in 24 hours if needed, they are going to need to have, I think, a very strong early warning system.
Indeed. Talk to me a little bit though about the price. And this was one thing also that His Royal Highness picked up on too yesterday, when somebody asked him particularly about the fact that we're sort of languishing around the $40 at the moment here. Now, this is maybe adequate for right now. And when we look at the lows where it came from, it's possibly like very good in many ways, but it's not sustainable when we look at investment, for the future, but also not good for the American market at this price, really, is it?
No, I mean, this is a market, this is a price that looks good only in comparison to where we were months ago. I think if you had said to people at the beginning of the year that we'd be talking about Brent in the 40s, and that would be seen as, a good development, people would have said that's absurd. But again, it just shows you how severe the demand contraction was in April, how far prices had fallen, that we're talking about a recovery into the 40s. I mean, again, this is not an optimal price for investment in the US shale industry. We're already seeing international oil companies pull billions of dollars out in terms of investment. It's also not a good price for most of the OPEC plus producers. I mean, when RBC tries to calculate what is a fiscal break even of OPEC plus, we put it around $90 for the organization as a whole. Now, again, there are great divergences within this group of producers, but still, many of these countries will either have to borrow significantly in international debt markets, they will have to go to the IMF for emergency lending, they will have to cut spending domestically. So $40, while better, is in no way an optimal price for both shale producers, for IOCs, or for sovereign producer states.
Especially, I think, when we look at the developing economies in many of the OPEC and OPEC plus, a lot of money is needed for the social programs, for infrastructure build, and indeed for just rebuilding the economies, from the past, never mind rebuilding post-COVID. So it's going to be a tough time, I would think, and that recovery period will probably be a lot longer for some of these countries as well. What do you think?
Absolutely. And I think certain countries are best placed to deal with this price environment because they learned from 2014 and the price collapse in 2014. And I think about a country like the UAE. They basically said, we're going to use the price collapse in 2014 as a burning platform to make really important reforms, to get costs down, to bring in outside capital and partners. So a country like the UAE, I think, is better placed to weather the current environment. But there are other countries that this really is going to be an enormous challenge if prices do not move into a better place, relatively quickly. Again, that's why Iraq is such an important one to watch, because they need the money. They have serious social challenges, security challenges. And so those countries can really, really suffer if we don't get an improvement in prices, or if we have another setback and prices fall back significantly.
Let's return to the US again, just for a minute on this. When we look at inventories are coming down, both, I think there's big draws on crude and indeed gasoline as well, but also production is down. And that $40, as you said, it's not going to keep many of the shale players happy. And indeed, many of them have had to pack their bags, so to speak, already on this. What's the outlook really, and how concerned is the industry over there?
No, I think the industry is concerned. I think the questions sort of long term about shale is going to be, who's going to develop the resource? Because the rocks remain in the ground, the oil is still there, but is this going to be an industry that we see consolidation in? Are we going to see more of the majors come in and pick up some of this acreage from these distressed independents? And will the development of shale look different because maybe you have fewer companies developing the resources or the international oil companies developing the resources? And does that change the way US production comes on the market in terms of volume?
Now, one other thing we need to be looking at in the US as well, of course, is it's an election year. And I'm not asking anyone to declare colors on this, but it could, at this point, I think, go either way. What kind of brief scenario can you give me if it goes Republican, stays Republican? Is that more in favor to the oil sector? I would imagine it is. Or if it might go Democrat, what do we need to be looking at? And even on the wider geopolitical issue, maybe we have to be, looking at sanctions in this part of the world as well.
No, I think this is a fantastic question, Etna, because President Trump has been very supportive of the traditional fossil fuel industry, very supportive of the coal industry. He has not been nearly as focused on environmental issues. I think that's where you'd see a major change with the Biden administration. They were already at the campaign with their proposals to really invest heavily in clean energy, renewables. That would be the focus of a Biden administration when it comes to energy policy. In terms of foreign policy and how it relates to energy, I think sanctions are very, very important to watch. If you think about the Obama administration, one of their key achievements was, from their view, the Iranian nuclear deal. President Trump took the United States out of that agreement, put unilateral sanctions on Iranian oil exports. 2 million barrels of Iranian exports have subsequently come off the market. Those barrels, I think, really hang in the balance. If you get a Biden administration, if the Iranians agree to make significant concessions on their nuclear activities and become once again compliant with the agreement, could you see the return of large quantities of Iranian oil exports? And again, when we think about if you have to be an OPEC, planner, how do you think about these contingencies? How do you think about Libyan barrels? How do you think about potentially returning Iranian oil exports? Like, these are the type of issues, I think, to 2021 that could be very important for them to sort of gauge, how do you handle all of this volume?
Now, when we look at the, financial results from the oil companies, Q1 was not pretty, and Q2, which we're probably going to be seeing very, very soon, will probably be worse, I think, by any indication here. What do we think? What are we hoping for? And what do the companies, what's going to be the saving grace for the rest of the year, do you think?
Well, I think the companies, just like the OPEC producers, are, really hoping that this recovery takes hold. They are really hoping that you don't get a return to shelter-in-place restrictions, that you have, the easing of lockdown restrictions, the reopening of economies on a global scale continue. I mean, I think that's what's really going to be important for the whole industry, is to get demand back into on stronger footing.
Now, talk to me a bit about, when you see the dynamics at OPEC at the moment, and we looked at the Russian minister statement, Minister Novak really coming out, in solidarity with OPEC Plus, and, you could really feel that was his commitment is there. But also you have to look at some of the producers, particularly in Russia, who may not be as keen to actually be keeping those barrels off the market. Has that been a bit of a dilemma? I suppose a bit of a challenge for him to make sure that he can toe the OPEC Plus line and stay focused on that, while at the same time trying to keep the producers back at home happy. How's he managing it?
I think Alexander Novak has a very difficult job. I mean, I think he has done an excellent job in terms of oil diplomacy at OPEC. As you know, Etna, he's highly regarded by the rest of the ministers, but he has to deal with a number of oil companies back home in Russia that, due to the way the Russian tax structure works, the windfall gains of higher oil prices tend to go to the state. And so if you are a local producer, you make more money by increasing volume. So it's always been this challenge for, the leadership in Russia to handle the companies who essentially say, look, we have our own shareholders that we have to be responsible to. We need greater volume. And what we've heard is that the leadership is very committed to OPEC Plus, but they're also having to talk to the companies and say, can we think about other forms of compensation in terms of pipeline tolls and other ways that we can offset some of your financial difficulties, because we need you to be compliant with this agreement. And so I think that Russia is now back in the 10th, but managing the companies and helping the companies, I think, remains a key priority for the leadership there.
And I think when we look at the relationship also between Mr. Novak and indeed His Royal Highness Prince Abdul, and particularly since they're doing that power sharing on the Joint Ministerial Monitoring Committee as well. There's really, great camaraderie there, and they talk about how much, they do respect each other and, how they're going to continue to work together. But, despite the fact, of course, the Prince is the leader of Saudi Arabia in terms of the minister for there, he's also the chairman of the monitoring committee. So we're going to be hearing quite a bit from him month by month now, particularly I would think for the end of the year. And he's become a very, very vocal and interesting figure too. And I know he likes to call out the journalists and the analysts and insist that everybody's at the meeting and, talk directly to you all as well.
I mean, I think what is, for many of us, we've known His Royal Highness for years. He's somebody who, if you're an oil analyst, and you've been in this industry for a while, you know him. If you've traveled to Saudi Arabia, I mean, I think he sees himself in many ways as a tutor, sort of someone teaching the analysts and the journalists about the whole energy industry. And so I think he feels that because he's known us for years, he can certainly, call us out if he doesn't think we are telling the story accurately. But to be fair to him as well, he's not somebody who won't listen to differing opinions as well. So he very much engages in a dialogue. So it's not a one-way street. He very much is open to hearing different views and having debates. And he's known so many of the journalists. He's had 3 decades in this industry. So I also think that allows him to have this type of direct conversation with the analysts and journalists.
Indeed, I think, yes, we've all seen him over the years be so active in the background, attending every meeting, working actually with the OPEC Secretariat, I think also on policy formation and on a lot of the big events that were going on there, and even on, the declaration of cooperation. And I want to maybe finish on this with you. When we look at the importance of the declaration of cooperation, and it's been in place for a while now, it has delivered that strength with OPEC Plus. And I think the market has seen in many ways how relevant and how important OPEC has been in that. Would you say they can maintain the discipline, they can stay together, and perhaps the wider world of energy needs them to stay together to make sure that the world is supplied with the right amount and the right balance of energy in the future?
We all saw in March and April a world without OPEC. And so I think that we have learned, or the market has learned, the importance of this organization playing an essential regulator role. And so I think there had been so much discussion before the March meeting about, is this organization relevant and can they work together? I think the events that transpired in March and April showed that everybody is better together in this organization.
And that's a good optimistic note to leave it on. They've got a lot of challenges on their plate at the moment. So from all of us here at the ADIPEC Energy Dialogues, Helima Croft, thank you so much.
Thank you.
We'll keep in touch with you in the run up to ADIPEC. We always value and treasure your great insight and your great opinions in terms of what's going on, and we'll keep an eye at what you're doing at RBC Capital Markets. Helima Croft, thank you so much.
Thank you.